Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, September 25th. You're tuned into On Trend, the show designed to keep you on the right side of the trend. Here's what we're going to look at today. We've got large caps leading and small caps lagging. We're going to look at the changes in technology, consumer discretionary, and the new communications services, as well as the top stocks. We'll show you that the tech-related ETFs are still strong. We've got some Ask Arthur on the Coppock curve and other things. And finally, I'll finish with some stocks to watch. Large caps continue to lead. All right, I'm going to start off with a 1-month perf chart just to explain what's going on here over the last 3 to 4 weeks, well, 4.3 weeks, if you will, a month, August 24th to September 24th. And we can see that SPY and the equal weight S&P 500 ETF RSP are up, and they are showing some upside leadership. We also have QQQ up, and the Dow Diamonds is up the most, up 3%. But on the lagging side, you can see small caps are down, but they're not down that much, and they're still leading when you take the entire year 2018. Now, when we look at some of these individual charts, we can see some different patterns emerging. Now, on QQQ, we're still in a long-term uptrend. All right, we had this nice stable uptrend. We had that big surge in January, and then we turned into a choppy uptrend. And since this April low, it's been a pretty steady zigzag higher. All right, I've marked some of the flows, which is the advances, the ebbs, which are the declines. And we had a nice flow to a new high, and then we had a little pullback, and it looks like we're turning up again here with the two gaps. And you can see we gapped, pulled back, but the closes are strong. So it looks like this one wants to move higher. You can watch 180 if you're nervous about this advance. If you break 180, then maybe we correct a little bit further. But that would just be a short-term issue within a bigger uptrend. All right, now when I scroll to the next chart here, which is going to be SPY, we can see that there's also an uptrend and even more leadership. And the reason there is more leadership in SPY is because it hit a 52-week high last week. It was the only one of the 5 major index ETFs that I'm going to show you now that hit a 52-week high. So the S&P 500 is leading. Healthcare is the strongest sector right now. But I'm also seeing continued strength in technology. Industrials were hit yesterday, but still, hit a new 52-week high last week in an uptrend. And we can see this has just been a slow, steady advance. It is a low volatility advance. We had this volatility, and then we had the triangle breakout, and we're just continuing higher. There is nothing negative to report on this chart. When we scroll to the next one, we will hit small caps, and we can see small caps are lagging because we've got this, I'm calling it a bull flag, because basically you had almost a 10% advance, and now we've been correcting with a pretty slow decline. We've moved from like 90 to 88 or 90.3 to 87.7. It's not a big decline, maybe a 2.5% decline. So it's not drastic, and it looks like a corrective pattern. And if you can get a breakout there around 89.5, I think that ends the flag, and small caps get back into the uptrend, the bigger uptrend, of course, which is the dominant force. We got to keep that in mind. This ETF is on trend because the long-term trend is up. Now, for our next ETF, we're going to hit the Russell 2000. And it is at an interesting juncture, and I pointed this out last week. We have kind of a throwback working. So you had this ascending triangle form, and you broke out to new highs, and then we kind of pulled back. And this resistance zone turns into the first support zone, and it's a pretty mild pullback. And if we can break above 172, then that is going to open the door to new highs and participation from small caps. Now, in the indicator window, I've got the IWM SPY ratio. And you can see small caps outperform from March until June, and then they pretty much underperforms in July, August, and September. And it's not that big of a deal. All right. We're near a 52-week high. All right. We're in a long-term uptrend. It's not a big deal as far as, if you have to choose between large caps and small caps, okay, large caps are gaining more than small caps, but are small caps weak? No, I think they're just correcting within that bigger uptrend, and I expect a bullish resolution to this little correction, which means I expect a breakout. And finally, we're going to look at mid caps, and that will complete the market capitalization spectrum, if you will. We've got MDY here, and there's another triangle breakout and just working its way higher. And we've got a stall, and a stall just means you have a stalemate between buying pressure and selling pressure, bulls and bears, and it's a rest within an uptrend, and therefore I expect a continuation higher. Could we break down and pull back further? Sure, but I think the odds still favor more upside over downside. Now in the indicator window, I've got two price relatives. I'm comparing MDY to IJR, mid caps to small caps, and middies are starting to outperform a little bit, and then they're underperforming large caps. So large caps are still the strongest area of the market over the last 3 months. With the new XLC, we have to explore the changes in XLK and XLY. So on a regular basis, I check the components for ETFs. And when it comes to the sector SPDRs, I go to the website sectorspdr.com. That is the provider, the ETF provider. You can also go to State Street. I believe they are also a provider and have up-to-date information. So if you can see here, this is XLC, the new communication services, SPDR, and you can see it's around 10% of the S&P 500. So it is a big one. And what I wanted to do was find out the components in this sector, and you can click on the link there to open up that sector to find out more information. And there we can see a link for the holdings. And we look at the holdings, we can see that there are some biggies, in particular Facebook and Google. Google's the big one. It accounts for over 22% of the ETF. I wanted to see the changes before this realignment took place and now. And so I went to Yahoo, and they have yet to update their database. So they have the old technology weightings. I don't know exactly how old it is. It's a week or two probably. But you can see the old weightings. Apple was around 16%. Microsoft was around 12.3%. Facebook was a part of it. It's moved to communication services. Google has also moved to communication services. And so I put these two up to see what the big changes were. So let's first look at XLC. So this is the XLC chart, and you can also see that Telephone and Verizon have moved from technology to communication services, as has Electronic Arts and Activision Blizzard. And when we look at this chart, it's been declining since July. It's one of the weaker sectors this summer, early fall, if you call it here. But it could be a correction because you got to assume that this is a 52-week high here in late July. And maybe this is a wedge correction. And if we break out here above 50, then that is going to clearly end that correction and be bullish. And what I noticed is 3 days ago, you had a little gap and we have a strong close. So if you're worried about this advance here, say if we go below 47.5, then we're back into the downtrend. But I wouldn't be surprised to see a bounce here. So now let's look at technology and see how this sector has changed. And it has gone through a pretty big change. I've got the old holdings on the left, and you can see that the top holding is Apple, and the second biggest holding is Microsoft. No change there. But we can see, look at the change in the holdings. Apple goes to 19.5%, up from 16%, and Microsoft goes from 12.32% to 17%. So those are some pretty big weightings for the technology sector. We still have this problem where you have these big dominant players and they are dominating the sector. And then there's a drop off a cliff to Visa and Cisco and Intel, MasterCard, NVIDIA. And they also had a change in their holdings, an adjustment in their holdings. For the most part, it went up. But the point is, Apple and Microsoft are the new dominant players, even more so in the technology sector. Now, if we look at this chart here, it's clearly in an uptrend. And this is the uptrend short term. Maybe it's a wedge. And if you break below 73.5, then maybe we have a correction. I don't know how far it'll go, and the reason I say that is because the bigger trend is up. But if you want to know where this sector is going, watch Apple and Microsoft, and I'm going to have their charts coming up. Now, the other sector that went through a big change would be consumer discretionary. And that is because things like Disney were taken out and put into the communication services sector. And so you can see I've got these side by side as well. We've got the old holdings. So Amazon went from 25.45% down to 22%. Home Depot went up from 7.27% to almost 11%. And then you can see Netflix is out, and Disney is out, and Comcast is out. So that's what's changed in the consumer discretionary sector. And this sector is still in an uptrend. It's since the breakout there of the triangle, it's been a nice steady uptrend. Now we're going to look at some top stocks in XLK and XLC. We're going to start with the Big Apple. Look at that big move up, and now it's kind of a flag-like correction. And if you get a breakout within the flag, that's the first signal. And then you break out further, that opens the door to new highs. And this stock is 19.5% of the technology sector. Microsoft, this is maybe the most boring uptrend in the technology sector. But look how nice it is to have a boring uptrend. You get from 82 to 115 over an 11-month period. And it's just been steady as she goes with very shallow pullbacks. Visa is another one, and I've got MasterCard coming up. Very stable uptrend. Nothing really to report here. Cisco recently got a breakout. So it got two. You had this correction into the summer, and then the breakout, and a little flag, and the breakout. So this one is clearly a leader. Now, Intel, I admit, is one that has piqued my interest because, it had a big advance, going into 2017 and the beginning of 2018. And now it's got this long correction. And I think it's a correction. And you can see a lot of support coming in here in the mid-40s, the low to mid-40s from these lows. All right. And we've got a bounce, but we need to get a breakout at 49 to reverse this downtrend. But Intel may be one to watch going forward. MasterCard, another steady uptrend. NVIDIA is another one that's in a choppy uptrend, but it's a pullback within an uptrend. So this one does have a setup. All right, we can see that it surged to a new high, it pulled back, and I'll be watching for a little upside catalyst and breakout to open the door to more new highs for NVIDIA. And finally, Oracle, it's got a consolidation and a breakout, but it's not one of the leaders, so it's not really one I'm interested in. Same with IBM, Now that they've rearranged it, IBM is in the back into the top 10 for technology. And, it's got some resistance breakouts, but, it's not one of the leaders. So I just move on to another stock that is a leader, like Adobe has a much better chart than IBM. Look at that steady uptrend here in Adobe. All right, now it's time to move to the new sector, the communication services sector. And Google has a really interesting setup here. This is the biggest component, 22.82%. And you got this move to new highs, and we've corrected. But look at that consolidation. So we're stabilizing. Buying pressure and selling pressure have equalized. And even a little bit of firming with a dip down to 1150 and a close back above 1175. And if you get a breakout at 1200, that's going to be bullish for Google. And I think this is a potential reversal zone because you can see broken resistance turns support, and then we're near that 38% retracement. So you've had an advance to new highs and what looks like a correction. And if you break above 1200, that's the first sign that the correction is ending. And now Facebook. I'm not sure what to make about Facebook because, it kind of looks like that Starbucks chart all over the place, that McDonald's chart all over the place. And when I see a chart like this, I tend to just move on. Look for something that is a clear setup in my eyes. The only thing I see here is, we're holding above the spring low, and a little breakout there would be bullish for a counter trend rally if it is a downtrend. I'm not even sure if it's a downtrend yet. Charter is another one that's not that exciting. Sure, it's got a breakout here, but well below these highs. It's not a leader. Move on. Comcast, same thing. What's really going on here? I'm not sure. So I just move on. Now, Disney's one that I highlighted in Don't Ignore This Chart last week, and it has a setup and a breakout. Now, the trend is up because you moved to a new high, and then we pulled back. And when you get a pullback, then you've got a setup. You've got an opportunity. And you can see we pulled back to broken resistance and into that 38 to 50% retracement zone. It's not exact science, okay? You don't pull back to the 38.2% retracement in reverse. No, you kind of pull back to a zone. It's almost like you have 2 steps forward and 1 step backward here. And then you put your resistance level. I put it at 111 and we broke out. So it looks like Disney wants to resume its uptrend and continue higher. So out of these two, I like Google and Disney in this space. AT&T, yeah, maybe it's an inverse head and shoulders, but I'm really not into reversal patterns. I'm into corrections within an uptrend. And this is a nascent uptrend. Maybe it's just beginning an uptrend. Electronic Arts. Now, this one has broken down. It's got these big gaps, and it's 50 days below the 200 days, so I would move on. But there are 2 others in this space that look stronger, Take-Two and Activision Blizzard. And let's look at those coming up. Verizon, consolidating within an uptrend. Netflix is another one that looks bullish to me because you've got this pullback and you got this breakout, and we're consolidating around the breakout zone, holding it for the most part. So I would expect a run to new highs in Netflix. And then Activision Blizzard, all right, it's got a bullish pennant because you got that surge. You almost hit a new high. I think intraday you hit a new high there and a pennant. And I would expect a breakout and a move to new highs in this leader. And you can see it's a choppy uptrend here. All right, surge, deep pullback, surge, deep pullback. And now we've got a surge and we could break out to new highs. And then the other one, I added one more on this sector, and that would be Take-Two. It's 1.92% of the communication services sector. And you can see that big surge and another pennant, and a breakout there would be bullish. So to recap, you can see the ones I like for the setups are Google, Disney, Take-Two, Netflix, and Activision Blizzard. The tech-related ETFs still look strong, and we're going to look at 7 of them. So I like to organize my ETFs by sector. So I put all the tech-related ETFs in the tech sector, all the healthcare-related ETFs in the healthcare sector, blah, blah, blah. And here I've got first Sky Computing, which is part of the technology sector. And it's in a nice uptrend. You can see it hit a 52-week high there in late August. And that looks just like a consolidation within an uptrend. And we had a strong close yesterday. And a breakout opens the door to new highs in Sky. You'd expect new highs in something named Sky. Sorry for that bad joke. Next up is Hack, the cybersecurity ETF. And you had the breakout to new highs in August, and you had some new highs in September. And you can see that resistance zone turns support. And it's not a picture-perfect flag, all right? But basically, you have a sharp advance and a consolidation that looks kind of flaggish. And if you get a breakout at 40, I think that's the first signal that Hack is continuing higher. Next up, we have the Internet ETF FDN, and this one has been lagging a little bit because you can see it's been trading sideways since basically June. Hasn't moved much, but you know, it is a consolidation within a bigger uptrend because you had that massive advance into June, July 2018 here, and you've just been moving sideways to digest it. And within, I see this little wedge, and if we can get above 143, then that's going to be a bullish breakout, and that could open the door to new highs. Watch Facebook in particular on this one. Google is also a big part of this ETF as well. Next up is the networking iShares, and we can see this resistance zone and the breakout, and then the throwback to resistance, and we're firming, and it looks like we're trying to turn up for a bounce off broken resistance for networking. Next up, we have semiconductors, and I highlighted semiconductors last week because we have this kind of island reversal. You had a gap down, and on a candlestick chart, this is a hammer, and then you had a gap up. So there we have the island reversal, and we have a little breakout after that, a little short-term resistance breakout. So I expect SOXX to move higher. And watch Intel, because if it gets a breakout, it's the biggest holding. And SOXX is also getting help from Avago, Broadcom, AVGO, which is having a nice bounce off support. Next up, we have the semiconductor SPDR XSD, and it is stronger because it has just a big choppy uptrend, and it hit a new high there in early September, and it got that little gap breakout last week. And then perhaps the strongest ETF within technology would be software. You know, it just continues to work its way higher. And now it's time for Q&A. You can always send an email to askarthur@stockcharts.com. And I promise to read them all. I can't answer all the questions. Also, if you have any feedback or comments, those are also appreciated. So a reader wrote in asking about the Coppock curve and the settings used. And before you look at any indicator, it's important that you fully understand how it's calculated. And to find that out, you can always search or look in our chart school. So if you click that link at the top, you can see a little search box. And if you search for Coppock curve, you're going to get results. And there's the chart school article at the very top there of those results. And you can read all about the calculation. And it's basically a 10-period weighted moving average of the 14-period rate of change plus the 11-period rate of change. All right, so you got two rate of changes added together, and you're taking a 10-period weighted moving average of it. So that means the most recent data is weighted more than the older data in that moving average. And it's usually calculated on a monthly chart. So what I've done is I've calculated the Coppock curve here in that second window with the default settings. And I've got the rate of change 11 monthly, rate of change 14 monthly. So you can see how that relates. But as far as I'm concerned, I think the signals are a little bit too late. And I think the market cycle is kind of speeded up a little bit. And I'm updating that so I get the crosshairs here. Because you can see on this one here, you know, you're getting out kind of late, all right? You're getting in kind of late, and you're getting out kind of late. It gets the big trends, there's no doubt about it, and it's a long-term trend following indicator, but I would probably prefer 9, 6, and 10 as far as settings. That would be the 9-month rate of change plus the 6-month rate of change and a 10-period weighted moving average of those two. But I will also caution against looking for the perfect setting because once you find it, it'll stop working. All right, there's no such thing as the perfect setting. Pick a time frame that you like. I like that 6 to 9 month window. All right, 1 year is getting kind of long. Of course, I like 52-week highs, but I think 6 to 9 months as far as a rate of change is a pretty good time frame to watch. Now, another reader writes in asking if I think XLC and XLRE, where do they fit as far as offense and defense are concerned? And first, I'd recommend you try out the market carpet. There's a link on the right there because we've added the new sector to our market carpet, our sector market carpet. And so you can click on and you can see the sector ETFs there, and you'll get a sector market carpet, and you can right click to show the ticker symbol to see all the tickers in that market carpet. And if I go up one level, there you can see they're all labeled. That's communication services. Now, I would think communication services is an offensive sector because it should perform well when the economy's good. It's like the consumer discretionary sector. REITs, I'm not really sure where to categorize those because they're interest rate sensitive and there's a lot of other things working. I think the really only true defensive sector is going to be consumer staples. All right, healthcare, you got some growth aspects. Utilities, again, you have some yield and interest rate aspects at work. But I think consumer staples is the best defensive sector, and I think consumer discretionary and communication services are the two best offensive sectors. So another viewer of the video writes in and asks, how could I change, say, a 12-month EMA using monthly bar charts to a daily moving average and capture the same signals? And what he was looking for was, when does price move above the 12-month EMA and below the 12-month EMA? And these are monthly bars, so that means you only get a final bar at the end of the month, and you have to wait till the end of the month for your signals. And below, I've got the PPO to show the moves above the 12-month EMA and below the 12-month EMA. And I think to change this to daily, you'd have to do two things. First, of course, you'd have to change this 12-month EMA to, say, 255 days, which is about one trading year as far as trading days. And second, instead of monthly closes on the daily, you'd probably need the average of the close for the month. So say 23-day moving average. And that would line up better for a transfer from monthly to daily. So if I change this to say 255, and then I add another exponential moving average, and we'll add a 23, and I will make that solid, I will make that dashed thick, and I will make it green so it stands out. And I'm going to make this daily, and then I'm going to make these bars invisible so we can see those crossovers better. So it's looking for the chart type, and if you scroll down there you can see invisible. And then here I'll change to 23,255 to match those two moving averages. And now you can see on the chart it looks pretty good, pretty close to what we saw before as far as a monthly moving average. You're going to get whipsaws, that happens, but you're going to capture big trends and you're going to see every day where those moving averages are. Thanks very much for the questions, and remember, ask Arthur at stockcharts.com. All right, now it's time to look at some charts worth watching. All right, first up, we have Workday, which I think is one of the stronger uptrends at work. It's just working its way higher there. You can see with higher highs and higher lows, and we got this pullback to a potential support zone to watch for a bounce. Then we have Autodesk, had a big move in September with a gap to new highs and then a falling wedge correction. It looks like it's breaking out of that wedge. Workday is another stock that had a big surge and a breakout in August. And you can see this resistance zone turns support, and we pull back to that zone, a throwback, and I'm watching for an upside catalyst here and a breakout there. And finally, in healthcare, we have Vertex Pharmaceuticals. I highlighted it earlier with the pennant. We got the breakout, but we fell back to the consolidation zone, the pennant apex, and it looks like we're breaking out again. And that concludes today's edition of On Trend. Thanks very much for tuning in. And remember to stay on the right side of the trend.